We aim for companies between a $30 to $500 million market cap for our junior market aim, and companies of any size for our main market. The companies that we've seen are predominantly international, so they might be headquartered in Canada, for example, but have operations elsewhere. But an interesting trend is we're starting to see domestic Canadian companies coming through. So we had a listing of a mining company called Pure Gold last month, which has operations just in Canada, in Ontario. And that was very attractive to London investors because Ontario is a very safe jurisdiction with which to operate. So London is showing that it can support both international and domestic focused natural resources companies.
A very wide range of different kinds of resources companies that come to the London market. But if I was to come up with one overriding theme, it's a particularly good market for companies that are moving beyond the exploration stage and actually trying to access capital more for development and operations. And that probably drives why, actually, if we were to look at, say, the TSX market versus the London market, there is far more small exploration-focused companies in the TSX, but actually, a much larger proportion of development and operation companies in the London market. From a research perspective, Edison has actually done quite a lot of analysis around that and tried to understand which markets ascribe value to what. And we've definitely got evidence to show that development companies will actually receive a more favourable valuation in the London market, let's say, than they would say in the TSX. The final thing I would actually really just add then, and it's more to do with the US rather than Canada, is that the whole concept of what is a small and a mid-cap company has moved up in the US market. And so any sort of quite substantial company is really struggling to find a voice in the US markets. Conversely, if they come to London, they're a much bigger fish in a smaller pond, and they're able consequently to have more interaction with the buying side and actually access pools of capital with potentially, I guess, less competition.
That's been an interesting trend in the last few years, especially being over here in the Americas. As you said, London is known as the world's greatest market for natural resource companies focused on Africa. But what we've seen in the last few years is companies focused on Latin America, companies focused on Asia, are also benefiting from a London listing. So we had a company called Gran Tierra, which is Canadian headquartered with operations solely in Colombia, that is listed on TSX, did a dual listing in London, and has done well since then. So we're seeing that as a trend coming through, that London's becoming recognised as a place that can support companies that are focused all over the world. The investor pool in London is institutional rather than retail based, and it's very, very international in its makeup. So around 30% of institutional investors in London are North American, but then the rest of the pool is drawn from all over the world. And that's very different from North American markets, where the majority of investors are North American. So by listing in London, you get access to a much more international investor pool, but crucially, you keep access to North American investors such as BlackRock, Legal & General, and Vanguard.
Clearly, when resource companies come to London in the first place, generally speaking, it's around an IPO or a dual listing process, and the initial audience they're targeting is institutions, and there are deep pools of capital amongst that institutional audience. However, actually, what we would be encouraging resource companies to do is to also consider the much wider pool of capital that is available. The markets continue to fragment, and much more of the assets under management available to resource companies actually is sitting outside of the institutional audience. The key areas that we would focus on would be private wealth managers, family offices, and high net wealth individuals. All of these are really important categories in addition to institutions, and it's very important that companies develop an IR strategy to try and target all of these markets. They're not all relevant to all kinds of resource companies. I'll give you an example. High net wealth, for example, is much more focused on cash flow generation and having sight of a potential dividend stream at some point in the near future, whereas family offices are more have more risk appetite. So you've really got to try and think through what your strategy is and target that.
Well, first I'd like to talk about the differences between TSX and London. London tends to support companies at a larger size than the TSX tends to do. The majority of TSX listed companies are under $5 million in terms of market cap. For our junior market AIM, which is the most successful growth market in the world, we work with companies typically between a $30 to $500 million market cap. So already you can see, as opposed to TSX, that London can support companies as they get larger. In terms of choices between markets in London, we have AIM and we have the main market, and there are a number of ways you can list on the main market, either as a premium listing or a standard listing. The standard listing is getting increasingly popular with resource companies. We've seen a number of those list from Canada in the last few years. In terms of investment, investors are agnostic between the two markets. Institutional investors invest in both AIM and main market listed companies. Regulation, the stock exchange is responsible for AIM regulation, whereas the UK government regulates our main market, so that's one thing to consider. But both regulatory regimes are comparable to that of TSX.
When companies come to the UK, either through an IPO or a dual listing process, they will have an ecosystem of advisors available to them. You know, if it's an AIM listing, there will be a nomad involved, and there will obviously be brokers and other advisors involved as well. But what needs to happen is then, beyond that initial transaction, the company needs to think about how it is going to build its presence and build and grow the relationships that it has with investors. So what we are encouraging companies to do is to try and think about how to develop that IR strategy, and Edison is in a great place to be able to help companies do that, both through our research and also through our IR services. The other thing to also recognise is that actually resources is one of the real sectors where it is a global platform, and dual listings and work particularly well. But what you've got to do is you've got to therefore have a platform to access all the pools of capital available, not just in the UK or continental Europe, but globally. So what I would do is encouraging companies to think of what they can access through a UK listing, but also then build that out into a global IR strategy using a company like Edison to be able to access pools of capital in the UK, Europe, North America, and everywhere else in the world.
So we get asked about Brexit in every single meeting, but I think it's fair to say that it hasn't so far affected the IPO market in London. 2017 was a record year for the UK. We had more IPOs than we have since 2014. For the energy sector, we've had a big increase in the number of energy companies listing, especially from North America. There have been 40 listings overall from North America into the UK in the last 2 years, and a lot of those have been resource companies. And there are a lot of drivers for that, but I think one important thing to mention is that there are a lot of investment funds that companies can only get with a UK listing. So the amount in those funds is now $301 billion. And for the oil and gas industry, the amount in UK-only funds has increased by 22% since the referendum result was announced. So there's actually a bigger pool of UK-only capital that oil and gas companies and mining companies can use. The growth of the cannabis industry in Canada, I think, is a driver for resource companies looking at international markets, but there are positive reasons why those companies are choosing London, and those are the international investor pool, the ease of listing, and the focus on London as the world's most global natural resources market. So whilst that has been a catalyst for companies looking elsewhere, there are positive reasons why those companies are looking at London. Well, listing in London is relatively cheap compared to North America. The average underwriting fee in the UK is 3% of the size of the deal, so the amount of money you're trying to raise, versus 5.7% on TSX, and around the same for listing on NASDAQ or the New York Stock Exchange. So already that's a huge difference in terms of the cost of listing. Coupled with that is the fact the UK has a different legal environment to North America. You are less likely to get sued in the UK than you are in the US as a foreign listed company. So that's something that companies tell us is an important factor in their choice to list in the UK. The other thing in terms of regulation is that there is no quarterly reporting requirement in the UK, whereas companies would report quarterly listed on a North American stock exchange. So again, that's something we hear from CFOs is an attractive factor in their decision to choose London.